Happy weekend there, Maverick traders. This is Rob Reinhold, and look at the month. We are going into July, monthly options exercision week. At the end of this week, we take balances, we calculate profits, we make distributions on Tuesday, and then we do level advancements on Wednesday. So let's have a good close this week, and then we can take a look onto August. In this session, when we're going through the news of the week, there was a lot of news this week, but it didn't really move the market anywhere. We're going to take a look at those markets. We're going to take a look at those sectors. You're going to see this is kind of a funky market right now. It's a tougher market if you're not in the right stuff. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, let's take a look at the news first. So let's talk about the overall market news. We've had the markets really basing at all-time highs. And in fact, the RSP made a new all-time high on Tuesday before selling off. And we really saw a really wild swings this week in the AI tech trade, which have been happening for about the last 2 weeks, where sometimes they're up 5%, sometimes they're down 5%, and it could be every other day we're seeing these kind of moves. So I've talked about the AI tech trade and how I'm no longer participating in it. I said that about a month ago, and I've been very happy just to be sitting on the sidelines and watching the craziness go. In the end, they're off about 10, 20% off their highs, but they're not going anywhere. But there's a big range to where volatility is hurting a lot of people that are trying to trade these directionally. We also got in the middle of the week, the Iran-US ceasefire fell apart. Iran fired on a few ships in the Strait of Hormuz. The U.S. retaliated, and then Iran sent missiles and drones to all of the Gulf countries. And so the fighting is back on, and Trump said that the ceasefire is over. Markets didn't care. And oil popped about 10% and then gave a lot of it back. I've been reading about what's been happening over there in the Strait of Hormuz. I love human beings because they always figure out the best way to do things. So we had this open waterway that was really never a problem. And now that it's no longer entirely safe, corporations and people have figured out that, hey, we want to avoid the Strait of Hormuz. So what do? They make alternate shipping lanes. And actually, I read that Saudi Arabia, about half of the oil they used to send through the Strait of Hormuz is now being transported by pipelines and trucks to the other side of the coast where it is safe. In the end, what has happened was the market is now okay with the Strait of Hormuz being permanently in conflict. And what's happened is they've diverted all the oil sources away from there, and they're figuring out ways to transport it over land to where now a lot less oil is going to go through the Strait of Hormuz. So when it's disrupted, it's not that big of a deal. That's why the markets are just saying this is not a big deal, because the marketplace has changed. It has forced all of these oil companies to figure out how are we going to ship in the future and avoid this area. And they're figuring it out. So that's why it's not that big of a deal. And then next week, we have earnings coming up. So I figured this would be a pretty quiet week. And overall, it was a quiet week, especially when you take a look at the schedule. We basically had one report, the ISM services number. And this was a Goldilocks number. Not too hot, not too cold. It was a perfect number for the Fed. And everyone was happy with it. Other than that, not a lot on the schedule. So when we take a look at the markets did exactly what I thought they were going to do. Basically, nothing. We had the Dow and the RSP down 0.25%. It's very small. We had the Qs up 1.8%. They had a nice run, especially at the end of the week with semiconductors and technology. The Russell down 0.5%. Gold basically flat. And you can see oil ended up 4% when it was up 10% earlier in the week. We take a look at the RSP chart. This is going to look different than the S&P chart. I'll show you the S&P chart next, but you can see this is just a nice uptrend. We haven't really blown below the 20-day moving average in over 2 months. This is a nice bullish trend, and that's what we're seeing in the equally weighted S&P. when we come over here to the SPX, we saw that we topped out on June 1st, and we've really been going down since then. However, we started to make this wedge pattern, and you can see we broke out of that wedge pattern this week. And this extension of these last 2 days are telling me, okay, we're going to make a run up here to new all-time highs. We'll see if we can break through them. But the RSP looks bullish. The SPX looks bullish. The NASDAQ looks so-so. But there's no reason to be bearish here. We're in the middle of summer. There's no bad news. And the bad news that does hit the market shrugs it off. It doesn't even care. As you can see this week on the heat map, you can see that it's a pretty messy week. About half the stuff up, half the stuff down. So going into this week, we are in a little bit of a lull. We're in a really quiet period, and I still like the sector rotation story. I still like avoiding the tech AI trade, even though it did a little bit better this week. It's been a good call to avoid it over the last couple of weeks. I already talked about the Iran news and why I don't think it's going to be that big of a deal. If anything happens this week, I just see the market shrugging it off. The market has already moved away from shipping through the Strait of Hormuz. They've already figured out how to get around it. With that being said, I think earnings are the much bigger deal. And not really this week, because this week is mostly just banks. On Thursday, we do have Taiwan Semiconductor. I think that is going to be one. Now look, they're going to blow it out of the water. Right now, these semiconductor companies are at the high of their peak. Of course, their numbers are going to be great. The question is, what is their outlook going to be? Any damage to the outlook could be very bad for this tech AI trade. However, with that being said, I don't see any reason why any of them are going to say things aren't rosy, because they are rosy. Next week, we've got some big economic data with the CPI on Tuesday. Take a look at the estimates. The headline number is for negative 0.1. That really doesn't matter. Everyone's going to be focused on this core number. The core number is excluding food and energy. And at 0.2, that's a good number. If it comes out at 0.2, the market's going to be very, very happy. This did creep up to 0.3 in February, March, and the market wasn't too happy about it when it got to 0.3. So that core number is going to be the important one. And then we get the PPI the next day, going to be a little bit less important, but still important. And then we are going to hear from Chairman Warsh, which I'm sure he's going to be covering the inflation numbers. So you can see Tuesday, Wednesday is where the bulk of the big reports are coming out this week. Let's take a look at our market and just score it technically. This is totally outside of our opinion, totally outside of our beliefs, totally outside of how we feel. The market is above the 50, it's above the 20, and the 2050 slope is moving higher. That is a +3, which means this is the strongest bull market signal we can get from technicals. So we follow the technicals here at Maverick. That means we are leaning bullish still.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
All right, let's go into the sector performance because it was sloppy this week. Just pointing out, energy had a bounce back. Okay, it was down, 10% the 2 weeks before. This is just a bounce back. Tech had that big bounce. So tech has started to get control again and starting to look a little bit better than it did, along with communication services. Remember, this communication services is 60% Google and Meta. So when they do well, the whole thing goes up. Outside of that story, outside of the bounce in the AI names, take a look at this market here. And this is really where we want to focus on. The financials were up. Now, financials is one of our +3 sectors. It didn't soar like tech and comm services, but it held in there. Our other +3s were healthcare and industrials. And you can see they did not hold in so well. They were down more than the market. This is kind of the first signal that, okay, we had all these sectors that were doing better than the market. You know, the market went up 1% and they went up 2%. This is the first week that they've underperformed. This can happen. I'm not looking to jump to any conclusions until it gets a little bit worse. But materials, this was a sector that really underperformed the market this week. And I think we can see this likely to underperform going ahead. Let's take a look at all of our sectors and score them from +3 to -3 by the same metrics, above the 20, above the 50, and are they both sloping? And you can see utilities was a +1 last week. It's a +1 this week. It's mildly bullish. That's it. So mildly bullish trades look to be acceptable here. In the communication services sector, it got upgraded. So 2 weeks ago, it was -3. It got upgraded to -2. Now it's at -1. You can see here, we're just sitting between moving averages. So nothing really going on here. You can't say that this thing is really weak anymore. It's back to more of a neutral stance. Real estate, boy, that's about as zero as you can possibly get. These moving averages are literally on top of each other, and the price is somehow in between the two. It's a zero. This was a +1 last week, so we downgraded real estate. This is healthcare. This was one of my favorites, and you can see we pulled back this week. But where are we technically? We're still looking good. We're still above the 20, still above the 50. This is still an uptrend. I think you still say bullish in healthcare. And really, we take a look at industrials, and it's a little bit worse. We pull back to the 20-day moving average, so we have to downgrade this from a +3 to +2. It's still a strong sector, one of the strongest. It just technically is pulled back a little deeper than the rest. We come over here to the financials that was also a +3, and you can see we pull back, but not nearly as deeply as we pull back in industrials. Financials remains a +3. Moving into consumer discretionary, this is a 0. Again, about as 0 as you can get. Moving into consumer staples, as you can see, this is a 0. These really aren't going anywhere, and this is where I've been hunting for lots of sideways trades lately. We're coming over here to tech. Now, tech, we had it at a +1 last week. We're taking it at a +1, but we really haven't cleared out of any major areas here. Ultimately, you know, this is the range. We got moving averages that are both sloping higher. So we get slightly bullish, but that's really about it. I really like some of the little industry groups in tech. When you take a look outside the AI and semiconductors, there's actually some really good looking trades outside of that little group. So I still like it overall. As you can see, materials hasn't gone anywhere. It's flat. And then we take a look at energy. We had a little bounce last week, but it's still the same. Moving averages are sloping down. It's below the 50. So this is going to remain a -2. This is where we were last week. And I talked about how this market is mostly neutral with a few winners and a few losers, but mostly everything's in the middle. This week, we just had a couple changes, and all that changed was that things got closer to the middle. So tech and real estate changed places. Industrials weakened a little bit. Comm services strengthened a little bit. So now we have less strong and weak. You can see a whole bunch of stuff that's just really in the center. We have some slight outperformance with healthcare, financials, industrials, and energy looks to be a laggard. Let's go take a look at our slot system and see what we had roll off. We only had 2 trades roll off last week. We had a short in Carvana, a -2, and Carvana had a little bounce, took it right at the top of the range, so that was a max loss, but it was pretty close. And then consumer staples, we had a Dollar General trade that ended up being a break even. So only 2 rolled off. A lot of our trades are doing extremely well at the moment. Lots of these bullish trades up here. So let's talk about where we're going to put our new trades this week. We're at a +3. So nothing has changed. We're at a plus 3 last week. And you can see we've already got quite a few bullish trades out there. So I've got 7 bullish trades out of 10 trades currently. So the trades I'm putting on, I'm going to put on 2 neutrals in consumer and consumer staples. And real estate has been downgraded twice from a +2 to a +1 to a 0. So that's the one sector that's moving the wrong direction. So I'm looking to add in a short. I've got a +2 there working. It's sort of working. It's in PK, so it's holding in there. But I'm looking to say, hey, I think this sector is going to be getting a little bit weaker since that's what we've been seeing. Let's take a look at some of these possible trades in these possible sectors. First up in real estate, looking for a bearish trade. This here is Digital Realty Group. So you can see, was in a downtrend. Briefly, we got up above that, and then all of a sudden, some news came out. I don't know what it is. I don't care. And you can see big volume. And then we've had this bounce on really light volume. So big volume fall to new lows. Low volume rise up to resistance levels. Hey, I like that as a bear rally pattern. This is the trade I'm looking at. The July 24th, 180, 175. So looking to basically be right here at the money, buying that at the money, selling that 175. So this thing needs to go down and get near its low or break below its low because I already decided I'm going to be -2. If you don't want to be that bearish, then the 185, 180, that looks acceptable here. And basically you're looking at, hey, this thing just can't go up anymore. It has to stay here or go down and you'll be profitable. Right, next up with the consumer, looking for a sideways trade. So this is Carnival, CCL. You can see it looked really sideways here and then got a little bit of a buy and then people got excited. But you can see after the earnings report, it gapped right back down into its range, tried to go back up to that high and failed miserably. And here we are down to this level. So I like this 26 as a really good floor. I think we've retested it twice. I like this as a floor. And I really like this 29.50, or let's just call it 29 as the high of the ceiling. That's exactly where I'm going to be hunting here. I'm looking for the 26, 28, 30. So this is going to be slightly bullish. So it's a targeted butterfly at 28. And our profit area is going to be right in here. So this is a little bit of a bullish trade, even though it's a butterfly. Looking for it to move up into that range. Carnival Cruise Lines. And then our other sideways was in consumer staples. Looking for Campbell's. So Campbell's Soup, as you can see here, we had a really big decline, really big fall, did not do well, finally bottomed out. A lot of times these big, safe, stable companies, I'm air quoting, these things do have a floor because they have dividend payments. And as long as their dividend payments look to be good, there's only so far these things can fall before they have such an attractive dividend that people come in and buy them for that reason. Not because they think the company is great, but because the dividend. It looks like that $20, it was really a nice floor on this one here. And you can see we even came back down, almost got to it, and bounced right back up off it. So I'm really looking at this as, okay, we've got, some really good support down here at 20. And overall, it's probably moving a little bit higher. So I want to do another just little targeted butterfly. Going out 2 weeks, looking at the 21, 22.50, 24. So this is the area here. So it's a little bit bullish, but the profit window is going to be right in this area. In that profit window, that'll be a profit. Outside of that, it'll be a loss. Campbell's butterfly. Let's wrap this up. I still like the sector rotation story. I still think the tech AI trade is going to be a very tough trade. If you're a day trader, I think you are having a fun time with them right now. If you're a swing trader, you are really miserable because one day you're like, oh, finally it's going my way. And then the next day you're down again. And then you say, oh, should I get out? And now it's going your way again and you have hope. Yeah, no thanks. I'm in other places because I just didn't want to play that game. And I also put summer melt up likely. So What that means, a melt up, is just when there's a lack of sellers. If there's a lack of sellers, there is a constant stream of money going into the market from 401ks and IRAs. And if there's no sellers out there, it just creeps up. It just pushes up and creeps up to a point where we just have what's called a melt up, where it's not about there's so many buyers, there's just not all that many sellers. So we just move higher. I think that's likely what we're going to see this summer. Of course, the black swan events can happen anytime, but for the foreseeable future, I think things look pretty good. We do have these earnings this week. Banks, I can't imagine that the banks are going to announce any bad news. The economy's been great the last 3 months, and it still looks good going forward. I think this earnings season is like to be more bullish than bearish overall. Thanks for joining me. Have a great weekend. Goodbye, everybody.